Welcome back, pre-market prep traders. This is Kyle Bazzi filling in for Joel Elconin out for the week. My next guest, Vlad Karpel, is a good friend of mine from founder of Tradespoon, but this guy is no slouch in the industry. He's also a former EVP at OptionsXpress, obviously bought by Charles Schwab. Good morning, Vlad. How's it going in Chicago this morning?
It's good, Kyle. Chicago, it's raining right now, but the stock market is up, so we're excited. And it's a low volume, but it's pretty good. How you doing today?
I call that an inverse pair play. I do my rain dance, and when it rains, the stock market goes up. So I think it's 6 for 7 right now. So it's definitely working on my side. It's going well, buddy. What we were just talking about Apple looking to hit that $100 range today. The Nasdaq hitting a 20-year high back to March of 2000. It's turning into a little bit of a crazy day. What are you seeing on your radar screens?
Yes, we're bullish on Apple, and it has been one of our trade recommendations at Tradespoon. Just a little background, we do both technical and fundamental analysis. So with Apple, with new launch of product launch that will happen in the next quarter, and technical momentum behind the trade, we are bullish on Apple, and we provide both stock and option recommendations with specific entry and exit points. So if you're bullish for Apple, we're looking to sell a put spread when the volatility goes up. But if the volatility is low, the way it is now after the earnings, then we're buying debit call spreads. And we usually buy in the money call, delta over 85, meaning that for every dollar move of Apple, the call will move for 85 cents. And we're selling out of the money option to collect the premium. And our sweet spot is kind of 50 days out of the expiration. So we're giving ourselves 50 to 60 days before the option contract expires. So we're selecting October as the price. And last time I checked, Apple was at 97, 98. So I think buying 95 call, selling 100 call, or that would be a great debit spread strategy. If you do see a pop in implied volatility versus the historical 52-week implied volatility, then you might consider selling a put spread. So Apple has been on our radar. We also look at the transportation sector. It has been sold off, especially the airlines and railroad sector. But UNP in railroad or Spirit Airlines, ticker SAVE, has been on our radar for quite some time. Delta Airline has been on our radar. It sold off. It hit that 32% retracement if you're technical trading, but fundamentally it's a very strong stock. It beat earnings estimates for the past 4 quarters. So we think the transportation sector is still in the uptrend. Switching over to the energy sector, that has been sold off lately quite hard, especially like oil and service industry, and symbol HP is something on our rider. Baker Hughes, BHI, has been sold off, and we haven't seen them participating in the rally right now. So there's this divergence from S&P. So I would be careful of getting into it, but I think it's sold off. And in terms of fundamentals, in terms of earning consistency, I think oil sector has a lot of momentum. And at some point, maybe in October and November, you'll see a pickup or a rally in that sector, and it's something you should keep your eye on.
I read a blog post from you this morning talking about the consumer discretionary ETF XLF and really harping on consumers being the lifeblood of the economy, obviously, but also the market right now. Can you expound on that?
Yes, we're back to school season, and a lot of the discretionary stocks has been kind of in the uptrend. Home Depot had the earnings announcement today. It has been lows, and Home Depot has been on our radar. We're bullish on Home Depot. They beat their earnings estimates today, and they revised their full year earnings to the upside. So I think there's a momentum going into a season. Amazon has missed their earnings last quarter, and they're all about investing. So I think you have to, in the discretionary sectors, I would keep your eye on the bottom line and the top line, and make sure if you are going bullish, especially into the back-to-school season, you want to pick a stocks that are fundamentally strong and technically strong. A lot of these stocks, like Gap or big retailers such as Sears, they have been sold off a lot, and they are fundamentally weak stocks, but you see short-term momentum there to the upside, but you just don't want to be caught in that rally on the low volume, and then the stocks will be sell-off. So at Tradespoon, we actually assign two scores. One is fundamental and technical scores, and only if the stock has a fundamentally strong bias and technically has been trading in an uptrend, then we would go along on that sector. So stocks like Sears or JCPenney, JCP, they have been beaten up. There's a lot of M&A rumors. So, and on a light volume, especially in the summer, they might, you might have a false sense of uptrend. So you just have to be careful in what stocks you select.
Well, now we just had the news out at 8:30 for U.S. housing starts as they surged 15.7% in July, also revised up sharply for June. We talked about home builders a little bit, but what does that, particularly mean in your strategy when you're kind of, you're very similar to our previous guest with Nick, kind of like a macro top-down approach when you're looking at which stocks you're going to buy. When you see that kind of number out in your mind, what is it kind of triggering for, any buys that are on your radar?
We've been bullish in Leonard and some of the other home builder stocks. They have been trading in the sideways for the past 6 to 7 months. So I think, there was a great article in Wall Street Journal. They were saying that the prices of the houses actually went down year over year because, in the past 2-3 years, they rebounded back from the recession. But that has been due to the hedge fund activity. But the retail investors and people who are just buying house for a living, they have not stepped into the market. So I think for our prediction is that in the next couple of quarters, the housing market will be trading in sideways. If you look at stock as Leonard, it's been trading between $37 and $41. So if you're an option trader, I would recommend maybe doing an iron butterfly where you do see spikes in volatility where the housing starts number come out, you see spike in volatility, especially right before the announcement. So you might want to sell a call spread 1 standard deviation out of the money. You might sell a put spread 1 standard deviation. And you look at that 50 days time horizon. So Leonard would be a perfect example where you might, before the earnings announcement, as you see the anticipation going up and the volatility spikes, sell, collect the premium, get that 30% premium, between the strike prices and sell out of the money call spread, sell out of the money put spread, collect that premium with the idea that if you give yourself enough time, 50 to 60 days till expiration, that premium will collapse after the earnings announcement. And these stocks have been trading in a tight range. So I think, it's a good strategy for the housing sector. And you can trade individual stocks, or just like you said, you can trade an ETF in the housing sector.
And Jason Shubs just put into the chat home builder stocks higher on better home construction numbers. DHI, HOV, KBH, and then as Vlad just said, LEN, Leonard are some stocks to look at in that sector. Vlad, so that we covered a little bit of consumer discretionary buying, but we didn't mention, and in your blog post it was important to note that Disney, DIS, the biggest component in this sector for the ETF, is breaking out to new highs, and it's important as the Apple is to the NASDAQ. If the bulls want this to continue to push higher, for Disney to continue on its tear. Any comments on Disney?
Yes, Disney has also been one of our recent picks. And we were bullish on Disney, and this is another example where you have to look at fundamental and technical analysis. And, a lot of the option traders or near-term, mid-term or short-term traders, say, why do you even hear about fundamental analysis? You just look at the probabilities, you look at the option action, you look at the supply and demand, and you can, take your position in stock. We actually prefer to combine fundamental and technical analysis. So Disney is a perfect example where we look at the earnings consistency, we look at the earnings revisions, and our proprietary model kind of assigns a score 1 through 10 for each of the stocks. And stocks that were bullish usually we have a rank of 9 and 10. 10, that means we're very bullish on the stock. 1 means very bearish. So Apple, Disney, URI, CSX, some of these symbols, we pick the best stocks in given sectors, and we only trade the best stock in the sector. And that just, trading is correlates. The most important part about trading is statistics. And you don't want to take trades that have low probability of being success. And you can kind of look at the price action of stocks and options to see what where the supply demand is and where the stock is going to be moved. So by combining fundamental and technical analysis, you're just improving your odds, your probabilities of being successful. So Disney is a perfect example where for the past 4 quarters it beat the earnings estimates. There are huge lines in Disney parks, and they have a lot of different products that are coming out. And if you look at their earnings and where it still trades at a low PE, it pays dividend. And on our radar, we have a proprietary score of 10. So we think that Disney broke out at that 52-week high, and it will continue to go higher this year.
So you mentioned with the options, let's dive into a little bit more of your option strategy. Disney's hovering around and kind of consolidating a little bit at that 90 level. And you said you buy the options about 2 months out. Is that correct?
Yes, our sweet spot is 50 to 70 days till expiration. So right now, August cycle has expired last week. So right now, all of our trades we're doing in October. So it's about 50 to 75 days range.
So looking at Disney right now, right at this 90 level, walk us through what your rationale is on, what kind of trade you could put on here if you would put one on.
Yeah, it did broke out to 52-week high, and it already gave earnings announcement. So I'm not sure if there's any other impetus for the stock going higher. We are kind of in a low volume environment, so I would look for a little pullback to the 52-week high previous levels. Volatility is very low for Disney. It's about 5 to 10% IV range, meaning that the current implied volatility versus the 52-week range of implied volatility is almost the same. So we are anticipating that as we go into the next earnings season sometime in September and October, close to October, the implied volatility will expand. So you have to take whatever the strategy you implement, you have to assume that implied volatility will expand. So if implied volatility will expand going into October, one strategy is to buy debit call spread because we're bullish on the stock. And one strategy is you buy in the money option. So if Disney is trading at 90, you buy 85 call with delta 85 in the money. So there's very little time premium in those options. And then you offset it with selling out of the money call. So you could buy 90 October call and 95, or 85 call and 90 call. So the way you select the strike, you look either one standard deviation away, or you look at the delta of 85, which is approximately the same thing. So you find that strike price, and you buy the call and you sell it out of the money call. So that's one strategy. A lot of people do calendar spread. They might buy October call in the money and then offset it with the September call, with the idea that September calls will expire worthless because the stock has already moved up. So you can sell 95 September call and buy 95 October call and have that calendar spread with the idea that as we get into the earnings season, implied volatility will expand, and even if the stock doesn't move and stays in that range, you will make the money on 95 call, and then going into October expiration, you might either close your position for a profit or roll your September call into October.
All right, up at 9:20, we do have Kate Long, a financial blogger, coming on. We're going to talk about some muni bonds. Vlad, before we do that, give me some your other buys and shorts that might be on your radar right now.
In railroad, CSX is on our radar. So I would look at that ticker if you want to invest into railroad. I think computer sector is an uptrend and will continue in the uptrend, especially as the capital, companies are, expanding their balance sheet and buying computers, and you have that cycle of capital expansion. And HPQ is another great symbol that I would put on your radar. In airlines, Spirit Airline, SAVE, is another ticker that's an uptrend. And I think those are the great stocks to buy, and especially if you're a long-term investor, you might want to buy in the money leap and sell premium, front months premium, and do it this way. Or if you're a stock trader, you can buy a stock and sell call and do a cover call strategy, which is on stock like Disney, you have the uptrend, you collecting money on the dividends, and you also collecting money by selling calls, front months calls out of the money.
So Vlad, what do you think? Do we continue higher on the NASDAQ here?
I think we're going to have, especially with all the geopolitical events and the low volume of the summer, I think it will be volatile market, but I think by November we'll be higher. In November we'll be higher than we are right now. That's my prediction. But size your positions appropriately. Don't invest any more than 3 to 5% in any given position, and always hedge yourself by using options or other instruments to make sure that when we do get volatility and we have a 5% sell-off to tomorrow or a week later, you size your positions appropriately. You have a hedge, and you don't get stop out of your positions because going into the October-November season, we will be higher where we are now.
Let's talk about the biotech here, too, as we got a couple more minutes. We mentioned it earlier on the show, but I remember a blog post I read recently from you talking about the biotech sector ETF BBH that obviously has continued higher on the recent surge from the sector itself. I know that ETF's led by Gilead Sciences, GILD, which we talked about earlier, too. What do you see in the biotech sector right now?
Biosector is an uptrend. It has been volatile, especially in the middle of the year. I think a couple months back, GILD and other biotech stocks have sold off, especially because they're small cap. They had a great run up in the past couple of years. They, 200% up in the past, year or two. So I think you have to be careful and size them appropriately. I think GILD is the best example where fundamentally it trades at a low PE, at a low range of its forward PE. And it's continuing uptrend. It has a great pipeline of new products, and we're very bullish on the stock. But I think short term you might get volatility, and you have to. I think on the pullback, it's a perfect time where you want to, utilize option strategy. Maybe sell a put spread on the pullback when implied volatility expands. You have a pullback, and I would just look at one standard deviation away where the stock price is, and when you do have a 2-5% pullback, execute the put spread, but give yourself more room in case the stock continues to drift lower. But I think long term, until the end of the year, I think GILD will be, will trend higher.
All right, Vlad, how's everything else going with Tradespoon? Can you talk a little bit more about what you guys do?
Tradespoon, yes, we're releasing a lot of new tools, and we believe in combining fundamental and technical analysis. So we have quant models that we build that looks for best and the worst stocks in any given sector. So we analyze which sectors are trending up and finding the best stocks on them, and then we just released the probability calculator that it only looks in the universe of our stocks. It looks at the universe of the best stocks in any given sectors, and using the probability calculator, it automatically finds the one standard deviation away strike prices and executes different strategies, options or calls, cover called or option spread strategies, and it finds the probability of the option expire worthless or in the money. By using these probabilities and finding the right strike prices, it answers the questions, when to get into the trade. And then looking at the fundamental and technical analysis, we are, looking at what to buy. So we're kind of addressing the questions of what to buy, when to buy, because we are looking at the technical analysis. We're looking at the Fibonacci retracements and other technical indicators to find at what point to enter the trade. And then, we execute the trade utilizing option strategies and looking at the implied volatility and demand and supply for options. And the third step that we just undertaken is we actually have a portfolio construction process where we can take the best stocks from any given sectors and create a portfolio on your behalf and run a rebalancing engine where we assign appropriate weights for any given positions.
Great, Vlad.
So you can actually manage your positions long term.
Well, Vlad, I really appreciate it coming on, Mr. Vlad Karpel, founder of Tradespoon, Mr. Big Shot at OptionsXpress previously. Always good to have you on, man, and look forward to talking again soon.
Thanks, Kyle. Always a pleasure.